As well. Cool. So it's Wednesday, 2nd of July. Just started quarter three. Lots of things happened on quarter two as well. Quarter one. I guess we will have a continuation of this volatility into quarter three, and we should be positioning ourselves already ahead of what could potentially happen for this month of July. Right? We've just started this, like literally the 1st of July. We already had Elon Musk and Trump, sort of fighting with each other. But mainly it's because the Congress is trying to rush to pass the Donald Trump's one big beautiful bill. That's as I think most of you saw the video I've posted last week. It's about sweeping sort of a fiscal package that would make Trump era tax cuts permanent, and that of course would raise the debt ceiling by $4 trillion, not million, not billion, trillion. $1 trillion, and spending on the Medicare. I think it's called Medica ID, something like that. Food assistance, clean energy programs, and a few other stuff. So today's FinLogic's sentiment trading day. That's basically where we find the low risk, high reward setups for the week. I know it's half of the week already, but still plenty of opportunities ahead on Thursday, especially with the NFP. A lot of people were asking what's wrong with USA because the NFP is on Thursday. Well, Friday will be the 4th of July. So that means it's the Independence Day. Okay, so Independence Day, nothing will be open on USA, so they pretty much put a day before. So that's on Thursday, 10:30 p.m. in Australia, Sydney time. Just have to check your time. Most likely for you guys in Europe and that sort of area would be around in the morning, maybe 12 p.m., 11 a.m., something around that time. But of course, check your economic calendar on FinLogic's for your time zone, and you can see exactly what the time would be. So today I've separated a few trades based on the FinLogic's sentiment tool. The first one is long on EURUSD. Second one is long pound dollar. Third one is short US dollar Japanese yen, and last and not least, fourth one is long Aussie against the US dollar. Of course, we can see when we look at it, we see that there's a lot of short on US dollar being punching into the market. A lot of risk on, so all of the euro, all of the pound, the yen, Australian dollar, they get benefited, right? So majority of the safe haven currencies like the US dollar, CHF, or any currencies correlated with exporting oil, so Canada or any Middle East sort of country, they would be getting hammered at the moment because oil prices are low. It's dropped more than 14% in less than a week. That was like, well, it went all the way up and then all the way down in less than 2 weeks. But prices are now back to, in a sense, normal. So not much happening into those currencies. Gold as well. Gold has been dropping all the way down to 3,250. I told the 3,200 would be the next target. It didn't have the momentum, so it came up for a pullback back again above the 3,300. Most likely, if that scenario continues of risk on, we'll continue to see gold just dropping. Okay, maybe that pullback was, maybe this retracement was basically a pullback, and there's a higher probability to continue to drop around 3,200 in the coming weeks. All right. Cool. So before we go any further, I need to put the risk disclaimer up, and then we should be ready to go. But for those who are new, I don't see any new names here, but you already know. If you have any questions, you can just send it on the chat. If you're a little bit shy or anything like that, you can just type my name. You can just select my name, so you will be able to see who do you want to send this message. So you can click there, and then you can select my name, and that message will only come to me, and I will answer your question without saying your name. So I think that's it. Let me put the risk disclaimer up, leave it there for a minute, and then we should be ready to start. All the pairs that we get here, all the 4 pairs, we got US dollar. So we're very, very bearish on US dollar. Um, let me show you the FinLogic sentiment tool first. So this one here, I'm going to send the link on the chat. Okay, cool. I just check my mic because someone say that it's not very well. All right, maybe it should be better now. I'll just change it. Can you guys hear me fine? Let me see if there is anything here. I think it should be better now. Well, let's see. Let me know how it goes. But yeah, I've changed a few configurations here. It has been silly the last couple of weeks, even on Teams or any other platform. But let me know. Maybe I have to change my whole headset. Anyways, so I've sent a link into the chat for FinLogics. You can access that link and you will be coming to this page. For those who don't know, the tool updates every 15 minutes. So you can check here the last time updated was 4 p.m. When we started the webinar. So in 3 to 2 minutes that will update it again. And this will all, if there is any changes, this will all change, let's say, from 1% to 5%, or from 9% to 2%, and it goes like that. So always pay attention. So always pay attention into it every 15 minutes, or if not possible every 15 minutes, at least into every day. Okay, maybe once or twice a day would be pretty good, because you can use that on the phone as well, right? So there's the phone version as well you can use. Cool. So that being said, as I say, there's a lot of US dollar shorts. And if we look to the US dollar index right here, DXY, for, an interesting fact that I've mentioned today on my blog is that, and I've mentioned yesterday on the webinar as well, the last 2 quarters, all combined, right? So from basically start of January last year to now, we've been down around 10 to 11%. Okay. Not counting the highs, because if we count the highs, that would be around 12%. So 12.19%. But it has been really, really bad since the beginning of the year. So all of the government from Trump has been pretty bad for the US dollar. Okay. We've got hit on yesterday, 1st of July, with a few things happening over a few, situation happening over the Congress. And what the Congress wants to do is, as I say, it's to pass the Donald Trump one big beautiful bill act, and that would be a fiscal package that would make the Trump era tax cuts permanent, and raise the debt ceiling by, I think, was $4 trillion, and any other spending on Medicaid, food assistance, clean energy programs, and all of this is really not great. Okay, it's really not great for the economy in a sense. It hasn't yet passed. Right, just making clear, it hasn't yet passed. It's still on the Congress to be passed. If that goes through, that would be really, really bad for the US dollar. Okay, and for this reason, I continue to believe on a very bearish US dollar in the next quarter. So this 3rd quarter of 2025. So these are the reasons basically I have all of this short position here fundamentally. And when we look at, see, it's going to update. Let's just look at it. And Euro dollar updated a little bit, and Euro CHF updated a little bit, Aussie pound, Aussie yen as well, but nothing too brutal. So Euro dollar has only 28% of people basically longing it, and 72% is majority short. And so that's really great. That's what we want to see: majority on one side and the minority on another. So we take the minority part. I've been talking about Euro dollar for quite a while now, maybe since beginning of the year, about the 1.20. Okay, I know we're still quite far from this, but not as we were in the beginning of this year. All right, so 1.20. There you go. So we're around I would say 2%. Yeah, around 1.7% away from that. We've started 2025 all the way down at pretty much 102, right? 101, 102. And we've had all of this move already just up and up and up. And I continue to believe this can possibly extend itself to 1.20, right? If we continue to see, the Fed, so basically, Fed wants to continue to cut interest rates. Jerome Powell had a speech yesterday, and that's why I always tell everyone it's really, really important for you to listen to those speeches, right? It's not only about FMC. During the week, we usually have one or two speeches. It doesn't matter if it's, of course, it will be higher impact if it's Jerome Powell because he's the chair. He votes sort of counts for more. But if it's not him, it's also important to see at least how the mentality, how the mindset of the Fed is causing effects into the market. Any comments, it's always felt into the market. Okay, so we had the comment on yesterday at 10:30 p.m. or 11:30 p.m. Here in Australia, Sydney time, that what Trump did with I don't know if you guys heard about, but Trump sent a letter. Trump sent a letter to Jerome Powell, and he took that. Let me go into images. He took this paper. Well, we can't see that, but oh yeah, there we go. So we took this. He took this paper that basically says the word central bank rates around the whole world, and United States was in 35, the position of 35 of 44. Okay, so it's basically in the last 10, right? So if we divide that in 10, 10, 10, so we would have around, it's like on the minority of the 10%, around that. And the first one is Switzerland, of course, and then Cambodia, and then Japan, Denmark, and all of those countries. And then after United Arab Emirates, UAE, we have United States of America with 4.5% of the rate. Okay, so Donald Trump basically say that, Jerome, you are too late. You should be cut the rates already before, and that would be save us lots of millions or trillions by a lot, hundreds of billions. That's what he said, hundreds of billions. Okay, so that basically made a comment on yesterday that Jerome Powell said they would cut more if Trump didn't do any tariffs, because inflation would be lower already. Okay. That of course was really negative, because now we know that the posture of the Fed is holding the rates higher for longer. Okay. In a sense, they still have 75 base points priced in for this year. So not saying the one cut or anything like that, but it could possibly be already 75 in the first half, right? And then we would be going for another 75. So Trump basically trying to criticize or trying to change in a way, even replace, that's what he says he would do, replace Jerome Powell with another central bank chair, won't change the situation. Okay, and history sort of repeats itself, because we had something similar happening in Brazil. Exactly same case. The president changed the chairman of the central bank in the hope of reduction of the rates, and it actually happened the opposite. They've increased the rates by 100 basis points in less than 1 year. Okay, so really, really bad situation for the US dollar. And I continue to believe, even if they hold for longer, or if they actually do what CME Fed Watch 2 is expecting, as of show yesterday, 25 base points cut on September, 25 base points cut on October, and 25 base points cut on December, we will continue to see US dollar down. Right? So all of this makes completely sense when we look to buy euro dollar, for instance. Just change that. There you go. We could potentially wait for a pullback around 1.17500. That would be the optimal entry. So 1.17500. There you go. We nearly got that entry yesterday. Right here. It sits on a support area, previously held as a resistance. Now sort of trying to push back around this area. That would generate some really, really good low risk to high reward setups here. If we were able to catch that move down and then waited for 1.17500 trade, we could place those stop loss below this low here. Go. So we leave a bit of room to the market, even if you want, even if you want to enter at half of this support right here, and then targeting 1.20 or 1.19. Either way, it's completely fine. Of course, if you extend your take profit to 120, you will have a little bit of more time to wait until that gets hit. Or if you just want to set up at 1.19, that could be quicker. It's just going to depend how your waiting time tolerance would be. Okay. Also, if you go for 120, you pretty much double the reward. But if you keep at 119, right here, you get just a second. You get 156 pips. 156 pips for take profit, 40 pips to stop loss. And if you go to 120, you get 257 pips to 40 pips to stop loss. That's pretty good, right? Setup. Just be careful because we're really, really close to the 10%. So another 18% would already suggest we're going to be looking for reversals. So if that happens before we touch 1.17500, I would say that trade is invalidated. In the sense of fundamental, that keeps going. Okay. That could possibly continue to be a valid trade setup. But for FinLogic's trading sentimental, I wouldn't suggest any more looking to longs. Second one would be the pound. So just briefly touch basing again on Elon Musk and Trump. I think on yesterday, today morning, yesterday on US, Trump, I'm not too sure how true this information is, but Trump said that he would export Elon. Right, so that was a funny thing to hear because Elon is an immigrant, he say, and with what Elon Musk has been doing with Trump, he doesn't think it's more friendly, and therefore the partnership would be finished. And then Elon Musk sort of retaliates that, and all the all the politics you guys already know. But in a Truth Social post, Trump basically reminded followers that Elon Musk company have received massive federal subsidies for Tesla, SpaceX, and SolarCity. And he implied that without government support, and that Musk would be forced to close his factories and return to South Africa. He also hinted as well that cutting all subsidies to Musk-linked firms if the criticism continues. So, in a sense, if you talk good, that's completely fine. You can continue to talk about me, but if you talk bad about me and about the government, we need to have a chat. Right. So behind the scenes, Trump allies, they're pushing to Tesla and other clean energy firms to their federal tax credits under the new bill. If that passes, as I say, the One Big Beautiful Bill Act, if that bill passes, Elon Musk could lose up to $1.2 billion in tax advantage for electric vehicles, solar storage, and all the infrastructure grants. Of course, Tesla reacted pretty sharp down, as you can see. So since yesterday, 2nd of July, there you go. So you open up with all of this gap right here. And definitely that's not great. All right. What was that gap actually? Interesting. Wow, that's 6%. Yeah, really, really not great yet. 6% just in that comment. All right. So just if you are trading stocks, just keep the following up with that Truth social media with Trump. That lots of things happening over there. Cool. Next one is the pound against the US dollar. I guess the hawkishness of the BOE will continue, right? And it's sort of being repriced. They were cutting, and now they're looking to maybe stop for a while and look for inflation to cool down more, and then continue to cut. If we look at the pound, GBPUSD, again, it's a currency against US dollar. Majority of the currencies against US dollar is very, very weak at the moment. If continues to be a risk on market, we'll continue to see that going through the second half of this year, the third quarter of this year as well. Sweet say on the chat that Trump is also an immigrant. His grandfather is a German. Well, that's exactly what I say. You know, if you're talking good about me, that's completely fine. But if you're talking bad, let's have a chat. So just keep an eye on that, because it's just politics and they sort of move the market, but not in the long term. So, you know, if momentum sort of trading, that's good. Most likely to indices and stock. But I guess US dollar trajectory is already really, really bearish, especially because of the Fed. So coming back here into the pound, as I say, the BOE will probably continue to maintain a hawkish stance for this probably the first half of this quarter, and that would most likely push the pound against the dollar to 139. And then from there, I really don't know what could happen, because really, really long time we don't see the pound into that price since 2021. Okay, so basically is on all-time highs since January 2022. So December 2021 to January 2022. If we see a push above this area, above 1.40, 1.42, sorry, then I guess that's overstretched already, and we most likely will have a retracement around 139. But for now, I guess we can capitalize into the shorts of the US dollar and continue to look to bearish pound. If we look into FinLogix, so if we come here, pound dollar is right here. So it's a strong buy. Again, it's 18%. Remember, always anything below 10% or 10%, I look at it as sort of a mean reversion strategy. So if we look at Euro pound, pound yen, Aussie CAD, even Euro Aussie, all of those currencies are below the 10% or are in the 10%. So for me, these trades here, they are over strategy already. If we go, let's say for Aussie CAD, right? Just show an example. So if we look at here, go to the 4 hour. Look at here, this trend is already very, very strategic. We can see the wicks of rejection of the candles on this price of 89,700 to 90, trying to push to 90, I guess, for psychological random round number. What could potentially happen if we see that continues to go below 9%? Wow, that was a huge update. Literally, like half of those currencies just disappear. Interesting. So if we continue to see below 8%, 6%, 5%, and then continues to drop, and continues to go very close to the 90 cents, short would make sense. Okay. Go to the 1 hour. Short would make sense if we continue to see this same sort of price action here. Very, very rejection, trying to go up and then reject, and now catch some momentum, but very, very, very weak momentum, because when we look at the bearish candles, they're much bigger. So it takes like 5 candles to go up and then one bearish candle to engulf all of the 5 candles up. So the momentum is still short here. If we get any move above 90 or 290, and we see this the FinLogic sentiment to reducing from 9 to 5, let's say, would be a valid setup to mean version. Okay. Anyways, so the pound Aussie, the pound dollar, literally disappeared from here. Okay, yeah, because we had the update at 4:30. Let me refresh my page. Oh, there you go. Came back. Cool. That sort of panicked me for a bit. But anyways, we have 17%. So it was 18% before, and now 17%. So only 0.1 of difference, 1% of difference. So I continue to believe on a long on the pound dollar. So where would be the best entry? If we look at the chart, I wouldn't say we could potentially come back to 136. That would be ideal. Okay, that would be very, very good, especially because of this support that was a resistance area before. We could potentially work with two setups as we did last Wednesday. Okay, so we can have a little bit of a risky setup and a little bit of more a swing trading setup as we did on US dollar Japanese yen. For those who don't remember, I can show that quickly. So we had this setup here that got hit it very, very good. Nearly got to take profit. It's like for 20 pips, we nearly got to take profit on US dollar Japanese yen, still holding that position. And for the riskier position we took, it was here for continuation of the short, but it didn't hit, it didn't continue, just literally hit its stop loss. And then we got this other opportunity on the top here that was a 3-2-1. So really good risk reward. So cover the losses of these risky positions and make 2% back. And now just got triggered this other position 1 to 2. So basically, how much is that? It's 73 pips stop loss to 140 pips take profit. So that's a pretty good 1 to 2 as well. Okay, looking to target the 142,500 mark. Now, coming back here, the pound is long. So what we can do exactly the same thing we did. So for short sort of stop loss and a longer take profit. And then if that gets stopped down, we can look for a little bit of more room for the stop loss, but still on a good risk reward. So my opinion here would, if we get a pullback around this area here of 136,800, I'm already pretty happy to long that, right? So let's get this one right here. So if we get 136,800 right here, and the stop loss would be tight, I know, and the take profit, we know we can go to 139. That's the main target. Okay, so get it right here, perfect. And the stop losses, we have two options. As I say, it's a more of a riskier setup. We can place below these wicks, or we can place below this 5-minute low, because that's a 1 hour chart. Sorry, on a 5-minute chart, that would be a low. Okay, right here. So there's either those two options. For me, I would place below these 5-minute lows right here. Okay, so that's a good risk reward. As I say, it's a 1 to 5. So basically, talking about 40 pips to stop loss to 205 pips to take profit. Pretty good. You make 5.21 times what you've risked. But if that trades get stopped out, then most likely we're going to be looking to break these lows. Okay, so my thinking here is, if we continue to just go below this area, get my pen. If we continue to just drop, and then we get, sort of the pending order gets activated, and we just don't turn and go, that would be the perfect outcome. And it continues to go lower, and it breaks below this low, and it breaks up below this low as well, so these two lows, then my second thought would be, well, it's going to come to this support. Right? So it's a magnetic zone, let's say. It's coming to this support at 136. And that's where my second pending position would be for long. All right, so it's a buy limit. Just get this one here. So 136, take profit exactly the same at 139. So that's a 300 pips take profit. And for the stop loss, I would place below these lows here. So when below these ones, or either these ones, you can choose. So we'll do somewhere around here. So that's a 1 to 5, the riskier position, and that's a 1 to 4. Okay, so 71 pips is stop loss to, it's 299 pips take profit, but let's say it's just 300. So we round the numbers up. So that will be my trades for the pound against the US dollar. Risk it setup and a more sort of, let's say, swing trading, not that risk setup. So it says, what else? What of the zone below it? 1.36200. 1.36200. Check. Change that to yellow. 1.36200. You mean put the stop losses at 1.36200? Not too sure about that. You mean like put the stop losses or the entry here? Just want to understand, because it's a good area. Once it looks very valid actually, because for those who've been following me for a while, it's a good eye switch, because if we look at here, we have this little box, right? And every time we have those boxes, it tends to bring the price back to that area. Okay, so if we go like this, we get triggered and then stopped out on these positions, and then here would basically be where the entry point would be. Okay, that's the middle of this support zone. I asked it why you were still talking about the first entry. Oh, okay, cool. Yeah, I guess this entry here, this one would be valid for an entry. Okay, and then the stop losses, we could even, if you are in front of the screens when the order get triggered, we could even look at below this lows, but it looked too good. Okay, in a sense of most likely we're going to have a sweep on that, and then a continuation up on the other side. So yeah, these are pretty much my favorite setups here for the pound against the US dollar. Now moving on, we have US dollar yen. Okay, so let's enter. So we have US dollar yen, and of course, short on US dollar, it's always a good way to long the yen. Okay, so yen is being a risk on currency. If you go to Google and start to search about risk on and risk off currencies, most likely the outcome you're going to get is that Japanese yen is a safe haven currency in a sense of risk off. Okay, so basically, when there's risk, that currency tends to perform bad, and then there is no risk, that currency tends to perform well. That has changed. That has changed, and the reason that has changed is because those outcomes that Google will give you, it's out of date. Right? So what I mean by this is that was a safe haven currency, that was a yielding currency, because back in 2023, 2022, post-COVID, like 2 decades ago, the yen was used to a reserve of value, to store value, because the inflation was so low and the rates were so low that they could borrow money from there to such a cheap price and invest their money somewhere into US, for instance, that they could make a carry trade. So they would be paying that mortgage in a sense from US yields and continue to gain money. So it was basically a free sort of money glitch that funds could do. Now it's completely different because we have a high inflation. Well, not high, but a higher inflation than before, and we have rates higher than before as well. So that doesn't apply anymore. So that becomes, from a bearish currency, it becomes bullish. Literally from 2023 to now. So if there is risk into the market, so if it's a risk on phase, let's say, we can long the Japanese yen now. So let's have a look into US dollar, Japanese yen here into the FinLogix tool. We can see there's a strong sell, right? And it's 12%. Again, yeah, I would suggest to always have a look here at least twice a day, right? Or even, if you can, every 1 hour would be perfect. But if you can't, then just do twice a day or once a day would be fine. So if that drops to 10% or 9%, just be careful because we could potentially see a mean reversion set up, and therefore that becomes invalid. But a continuation of these, maybe, it becomes 15 and maybe it becomes 20, that could potentially just strengthen more the trend down for the US dollar yen. Okay, so if we look at US dollar yen, there we go. So we have these box I've did on my blog today talking about this potential range. So most likely what we can see is pull back somewhere around the areas of 144,500 and a continuation down. Because if we just put it to a 4-hour chart, we can see that we are into a bigger consolidation, right? Since May of this year. So since May, we haven't moved pretty much anywhere. So we've been just ranging from 142,500 to 148 or 144, 145, 146. All right. So not big changes. For those who caught this position here, I would say continue to hold those positions would be really great. Anyways, so 15-minute chart, what we can see here, let me just delete all this. Perfect, cool. So, and then this one as well. We can clearly see this bottom, right? And then broken and retested and now trying to retest again. That's a really good way to position ourselves to the short position, right? So if we wait a little bit more or even just place a market order with a stop loss above these highs of 144,500, like somewhere around here, and the take profits at 142.42, there you go. It's not the best. It's not the whole thing about risk reward on this one, but I would say it's a reliable setup, okay? Because we got 78 pips to stop loss to 180 pips to take profit. It's basically a 1 to 2. So you're risking 1% or half a percentage to get 2% to get to get 2% to get 1.5% back. Right? If we get stopped out, then I would suggest to keep an eye on this tool because that could potentially be very aggressive towards below 10%. Right? It's just updating now. Let's have a look at it. It's taking a while. Yeah, nothing really updated. Nothing really changing. Still at 12%. Again, if that becomes below 10, just pay attention, okay? Because this trade setup can be invalidated. For the fundamental wise of US dollar yen shorts will continue to be valid. Will definitely continue to be valid because, as I say, we continue to expect a lower US dollar index. And with that, a continuation of the risk. If the continuation of the risk, a higher yen. So therefore, US dollar yen down. Cool. So let's just go over all the trades again. So we are long on euro dollar, long on pound dollar, short on US dollar yen. And now we have the last one. It's Aussie against the US dollar. So Aussie is a really, 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 really risk sensitive currency. Okay. I even put it up here. So it's long on, risk on. So every time we are risk on into the market, and I've made a content about that already. So if you go to ACY website, and then you come into learn, and you go into market analysis, education. You look for my name. Just a second. It's taking a while to load. There you go. So Lucas Santos, you can see that there is a blog that I've did on how to trade risk on and risk off market, a real world guide for traders. This is really helpful. I wish when I was starting to trade, or even a few years afterwards, I had this sort of content to help me understand what is the risk on, what is the risk off, what should I trade on risk on, what should I trade on risk off, should I trade Aussie on risk off, should I trade US dollar, etc. So with that, I've made a video as well, very, very compiling and easy to understand. I'm going to send the link into the chat. You guys can share with your friends and all of that. Cool. It's on the chat, the link. Make sure to read it, okay, because it's really helpful. Now, with Aussie, Aussie is a very risk-sensitive currency, as was saying for everyone. Every time we have risk on, a market tends to buy Australian dollar. Okay, so we are on a risk on. So we are on a risk on cycle of the market. So therefore, a continuation of this long trend, maybe up to 68, as I've mentioned yesterday, to 68 could be a potential target for a much, much wider and much, much longer target. I'm not talking about a week or not even a month. I would suggest the whole, remaining of the year to December, especially against the US dollar, because we have more probability of 75 base points cuts than none. So a continuation of this bearishness into the Fed this dovishness into the Fed would be very, very good for a continuation of the risk on appetite for investors, and that for Aussie dollar would continue to go higher. If we look into here, we have an 18%. There you go. So we have a, sorry guys. So we have an 18%, 18% only long on the market, and it's pretty good. As I say, if that continues to drop below 10, just watch out. But for now, a long position around this support is my. There you go. Cool. So if we see a pullback around this area, that would be a perfect entry. Okay. So for me, what I would like to do is place a pending order again. So somewhere around position, somewhere around here. Stop loss is below this little wick, and the take profit would be at 66, 500, 500, there you go. Yeah, cool. So that's a pretty good trade. Most likely we will be consolidated for quite a few hours now. If we get a touch on support, that would be enough already to trigger or order, and sort of liquidate all of these liquidity here, and a continuation up to 66,500 for the Aussie dollar against the USD. Now, again, just watch out if that becomes below 10. That's a big problem, and we have to understand all risks as well. That trade is a 32 pip to stop loss to 112 pips take profit. Pretty good. 1 to 3. Now, just let's go over everything again. So euro dollar, nearly there. So a little bit more, and we can see the order get triggered. It's a 6-1. That's a really great trade, especially if that sort of just pushes and go to the 1.20, that's a really, really long target. If you wish, as I say, you could place the take profit at 1.19. Now, for the pound dollar is long position as well. On this one, we have two setups. So we have longs already on at 1.36, 37, around 37. That's a little bit of a more riskier, a little bit more of return. But the highest probability is to get stopped out because it's a tiny stop loss. We're not going to be having too much wiggle for the market. But the second entry around 136, it's the preferable one. And we are looking for a little bit less return. So 1%, so pretty much 1,000 pips, 100 pips less. But it's a pretty good setup. US dollar yen. So shorts on US dollar yen. There you go. It's activated. It's, as I say, just be careful because on FinLogix, we have US dollar yen right here at 12%. If that becomes maybe 10, maybe 9, 8% in a couple of hours, I would just, stop out this position. It doesn't matter where it is, and just don't trade that in terms of the FinLogix sentiment tool. But if you wish to trade the fundamentals wise, wait for a bigger pullback and then a continuation of the short trend would be pretty good. And the last one is Aussie against the US dollar. Yeah, so Aussie against the US dollar, as I say, can probably stay here for a couple of hours again. If we have any, sort of impactful news or anything like that, then it could potentially come and get all by limit order at 0.65 400. That's a good trade as well. It's a 3-to-1, so 32 pips is stop loss to 112 pips take profit. That's pretty good. Hopefully we get this one right as well. Just watch out for the FinLogix tool because it's on 18%. If again drops to 10%, that would be a little bit of a tricky situation. Cool. Does anybody have any questions or anything about that? So Swin says, what about a break above? That's an interesting question. So if it breaks above, then I wouldn't be looking to chase the market just because the risk wouldn't compensate the profit. Again, 68 is very far. It's not around the corner. So that would take another 6 months to get there, right? Or maybe another 3 to 4 months at minimum. So if you want, and if your strategy is a breakout strategy, then that's a good trade. You can place your stop losses below 65,500 and you take profits at 68. That would be massive, 1 to 6 at minimum. But for me, I'm just going to wait for a little bit of more, let's say, pull back at the support and don't try to chase this trade up. Cool. Any more questions? Yes. Someone have a question? Let's wait. But yeah, that's a pretty good time to be in the market, to be honest, because we're having such a volatile moment that we haven't had in the last couple of years. So since 2023, every trade of Trump is a good trade. Every tweet of Trump is a good trade to be made. Market's been changing from risk on to risk off. It's really, really great. Cool. No more questions. I guess that's it for then, Dan. That's it for today then. Oh, there you go. Do you have a confirmation entry signal kind of thing, or you just pen and sit back? No, usually I just put pending orders. And majority of the time I'm in front of the screen, especially for the Asian currencies, so like yen, New Zealand, Aussie, etc. Because that's the moment they're moving the most when I'm awake. But I don't have anything like golfing candle, anything like that. I just try to look at the trend, see the fundamental wise. If that's a really where the market want to go. If it's up, I'll wait for a pullback down and I'll try to get the most extended pullback as possible. see if that pullback is really it's really a pullback, or it's not a reversal of fundamental trend and then just jump in. Right? That's pretty much it. Cool. All right, guys, that's it then. Hopefully everyone got a good understanding of what's going on. We'll be live again tomorrow from 4 to 5 p.m. And I'm updating the Telegram daily for the blogs I'm posting. So always go and click the link, go to the ACY website, read those blogs. It's very informative. It's something that you're not gonna want to miss out. Watch the videos on YouTube as well. If you are watching this replay, just don't forget to subscribe to the channel, and come to the webinar. It's always great to have this chat with everyone here. Thank you so much. I'll see you tomorrow, and have a lovely day or evening. Just don't know where you're at. Yes, this will be post. Yeah, tomorrow around the next 10 to 12 hours will be a little bit more. The next 24 hours that will be posted onto YouTube, so you can watch. If some part you didn't caught, you're a little bit late, you can just come to YouTube, ACY Securities YouTube, and you can watch that later. Cool. Thanks everyone. Have a great day. And I'll chat to you tomorrow. Bye bye.